Give me the big picture from your point of view and incorporate, if you can, as well, these results from Baidu and what that may say.
Baidu's numbers, not too surprising. We saw a flat or declining revenue across the board in China tech majors, Tencent, Ali seeing similar numbers. The growth in their kind of SaaS ecosystem businesses, particularly cloud, looks positive. But overall, they are suffering from a decline in consumption as a result of the uncertainty bred by China's zero COVID policy. And the company as well has struggled to really innovate over the last couple of years, seeing a lot of newer upstarts like Xiaohongshu or Douyin eating into their core ad-generated or ad-driven search business.
Ben, certainly there are trading opportunities in many of these Chinese technology names. But what about the longer term here with the COVID lockdowns and the uncertainty that brings, with the government's actions to rein in some of these technology companies with new regulations and requirements, and the overall performance of the economy there? How much of a headwind does all that create?
We're in a very challenging period. 2021 has been, I think, one of my hardest years on record as an investor in China. The good news is that we're starting to see some developments within that realm of areas where the Chinese government could take direct action to improve both domestic consumption sentiment as well as global investor appetite for China. The last 48 hours have really helped that. So, the decision or the agreement made between the SEC's Public Accounting Oversight Board and Chinese regulators to allow U.S. regulators to start to review Chinese audits, reopening the door for Chinese listings in the United States and shutting down a lot of those fears that, over $1 trillion of companies would have to delist. Some of the recent earnings, yesterday's Pinduoduo, the valuation, the share price of that company jumping up upwards of 20% during trading yesterday off the back of really stellar net income growth. So we are seeing some of that consumption returning as these stimulus packages take effect in China.
Yeah. Ben, I'm curious about your own approach. We seem to be diverging from China in terms of our two economies. In some ways, developing different supply chains and just different overall sort of spheres of influence, so to speak. How does that impact what you're doing in terms of investing from a private equity perspective or a venture capital perspective in Chinese companies?
Very much so. China and U.S. decoupling really started in the, kind of the middle years, and the Trump administration has continued to accelerate under Biden. China looking to kind of ward off, its dependence on U.S. core inputs. And so as a result of that, we are certainly investing alongside of many other funds in Chinese technological independence. So that's locally built chips, other core inputs, AI applications. We see that accelerating. China obviously also not wanting to be dependent on Western healthcare solutions in the long term. We see that in them refusing to import Western mRNA vaccines. And so, again, we've invested in locally developed vaccine as well as therapeutic treatments for COVID, as well as a whole range of other diseases. And so very much the divergence of the two ecosystems, as you said, decoupling, which means we're at different places in the cycle, I think, between the U.S. and China, but very much investing into this China walled garden approach.